So as many of you know, First Majestic's the purest silver company in the world with about 70% of our revenues from the sale of silver. That's actually going to go up in 2018. We should come around 75% in 2018 as a result of one of the expansions that we're currently doing, which I'll talk about in a couple of seconds. All our projects are in Mexico. We have 6 producing mines in the country, 2 development projects, and looking to build out those 2 projects over the upcoming few years. So the market cap is quite a lot lower than it was a year ago. But it's an improvement over where it was 2 years ago. So the last 18 months has been extremely volatile for First Majestic as well as the other miners, as many of you know. But our balance sheet is really almost as strong as it's been in the history of the company. 2017 actually is First Majestic's 15th year in business, and our balance sheet's stronger than it's ever been in that 15-year period, with over $100 million in the bank. You know, one of the things we've been doing to control costs is automation, and I'll get into a couple of things we've been doing throughout the business. I'm not sure if you saw my panel discussion earlier today when I was talking about technology that's coming into the business. The mining sector is going through change right now. Over the next 10 years, I'm expecting to see the mining sector much more efficient than it is today as a result of technology. One of the areas of efficiency, unfortunately, is the reduction of personnel. It's just an inevitable process through automation, reducing people. If you look at a mine, for example, in Canada or the United States compared to a mine in Mexico, the mines in Mexico have a lot more staff in them, due to the lack of efficiencies through automation. And we're not the only ones making those changes. Fresnillo, Pinoli's, they're right at the forefront of some of the change that's occurring in Mexico. We have been able to reduce our workforce from about 5,500 workers to 3,900 today as a result of innovation. So the financials are what they are. We have seen a little bit of cost creep over the last couple of quarters. As many of you probably know, oil prices in Mexico have gone up by about 30% over the last 12 months. The peso has also improved by about 20% over that same period of time. We have 80% of our revenue, 80% of our costs are in the form of pesos. So when the peso moves, it does affect us. But we can attack those costs by bringing in technology and automation, exactly what we're doing today. So the assets are spread around Mexico. We have a huge footprint in the country. We're very well known, very well respected business in Mexico. All the governors we're in contact with regularly. We're active in 8 separate states in the country with 9 separate projects. We've really become the go-to, kind of expat miner in Mexico, where we've really been able to attract, I think, one of the strongest skill sets there is in the country as a result of this footprint in Mexico. Going through each project, the ENCANTADA in the state of Coahuila, La Pria in the state of Durango, San Martin in Jalisco, Ligatera in the state of Mexico, Del Toro in Zacatecas, Santa Elena in Sonora. Plimosa, which is our next big development project, is in Sinaloa, and we just started drilling there at the end of 2016, and we hope to put out a preliminary economic assessment on that project sometime at the end of 2018. As I said on my panel discussion today, the miners have been under a lot of stress. We've seen production worldwide dropping in several key metals, zinc, copper, silver. We've seen miners produce less, and as a result of investment. If you slow your investment down, eventually production will drop. And that's exactly what's happened to us. And now that's all reverting. You'll see in a slide coming up that as you start reinvesting capital in the operations, you start to see production start going up again. But there's a delay. There's about a 12 to 24 month delay from the time you started reinvesting capital to the time you actually start seeing production increase. And we'll start to see some modest production increases in mid-2018, but you won't see the major uptick in production until 2019 as a result of the money we're spending today. This is our year-to-date financials. You see our costs are about $14 an ounce on an all-in sustaining basis. Santa Elena obviously is the big cash cow in our portfolio. The amount of money that generates per quarter is about $10 million in profits per quarter. So it's really the key engine behind the company. The Ligaterra is where we're investing a lot of capital right now, because Ligaterra will be our next expansion project late in 2018. So we're investing capital today. That's why you see the costs on an all-in sustaining basis on the high side, because that's the investment we're making in development and exploration. So our guidance for the year, around $14, $15 an ounce on a cash cost basis in the $7 range. 10 million ounces produced in the year, with about 16 million equivalent, including gold and zinc and a little bit of lead. And we're within guidance. The quarterly numbers do fluctuate, as you all know, who's been following the company. We had in Q2 we had unfortunately a couple of strikes which did affect us, and in Q3 you can see the numbers there. But I think Q4 will be a pretty bang-up quarter. So this is my point I was trying to get at earlier. You see, going back to 2011, this is when silver, many of you probably remember, in April 2011, silver hit $50 an ounce. So in 2012, silver spent most of the year around the $40 range. So we're spending a lot of money investing capital, expanding the business. When silver dropped below $20 an ounce in June of 2014, we had to wind the business down dramatically. I didn't want to go to the public markets and have to raise capital at ridiculous share prices. So the only solution to that was to wind the business down. And that's why the production dropped in the following years, because it was a lack of investment. Now the investment's coming back. We're spending $107 million in 2017. We're just doing the budgets now for 2018. The investment will be very similar to what it is this year, and you're going to see production, as I mentioned, start to increase over the next couple of years as a result of this renewed investment. So it's really exciting times. It's really great to be able to start expanding the operations again. And to my point about the delay, now this is talking about exploration, but if you look at this chart, you see the red line there. The red line is the amount of meters being drilled in the year. So if you go back to 2012, we actually drilled 130,000 meters that year. And then you see the reserves start to increase, because it takes about a year or two for the benefit of that spend, as I was saying. So you see the reserves start to increase. As the investment drops, as the red line goes down, you see the reserves start dropping as well. So this year we have 23 rigs active right now in the business. We've got 140,000 meters of drilling going on right now for this year. It's the largest drill program ever in the 15-year history of the company. So what happens? You're going to see reserves start to climb again over the next couple of years. As reserves climb, production climbs. So that's what we can expect to see. So breaking down our capital costs, $107 million is divided among all these different assets. You see, I'm not sure if this print is too small for you, but you see the largest investments going into the ENCANTADA operation with the roaster project, which is coming up in a sec. So this is the roaster. This has been on the drawing board for a couple of years now, and we finally got around to building this thing. The ENCANTADA has got a manganese component in the ore, and it's always interfered with recovery. So the recoveries at this operation range between 50 and 60%. It's actually been lower than that at some points, but generally speaking, it's 50 to 60% recoveries. So the tailings, or the waste material that's going into the tailings dam, is grading anywhere between 110 and 130 grams silver. That's pretty high-grade tailings. So we came up with this idea to roast those tailings. So we've got 30 years of tailings sitting on surface. This is a 2,000 ton a day roaster. So what it does, the waste that's coming out of the mill goes through this roaster, it gets heated up to 800 degrees, and it breaks the relationship between the manganese and the silver. Then we reprocess the waste from this back through the whole system, and we get another 1.5 million ounces of silver produced. So all of a sudden, the ENCANTADA goes from a 3 million ounce producer to a 4.5 million ounce producer overnight. So this thing's now under construction. You can see on the bottom here how big this thing is. This is a monster. It's the largest one in Mexico, and we're going to be installing it. These pieces are showing up on site right now. It'll be put together over the next couple of quarters, and by end of Q1, early Q2, this will be operating. So we're pretty excited about that. You see at $15 silver, it's got a 42% internal rate of return. So at $17 silver, today's silver price, it's going to pay itself back in less than a year. One of the things we've been really focusing on is getting our recoveries up. When you're when the prices of silver is dropping, and you're trying to make a profit from every ounce you're producing, one of the key areas that you need to work on is recovery. And it's something that we're very proud of, because back in 2012, 2013, we recognized the market wasn't going to improve. We saw metal prices dropping, so one of the key strategies in our business was to attack our recoveries. So if you go back to Q1 2014, on a global scale, we had about 65% recoveries. That means that out of a ton of rock, we're getting 65% of that silver, which is about, it's not far from average. But we wanted to improve that. So we started bringing in several technologies, as you can see on the top of this slide. And as we brought those technologies in, you see the recovery start to go up. And for every for every 1% increase, that's 100,000 ounces of silver extra hitting our bottom line. This is free money. And right now we have a target to get to 90% recovery over the next 2 years, which is going to add another 1 million ounces of production to our portfolio. And these are some of the ways we're going to do it. MICROBUBBLES is a relatively new technology. It was patented in the late 90s. There's only a couple of companies in the world that's using this technology. One is First Quantum, a company I'm very familiar with, as you probably know, and another company called Tech Caminco, and Goldcorp is also looking at this technology. What it does is you see a typical flotation bubble, which is quite large. It comes to the surface very quickly because of its size. These little bubbles here, there's many more of them, so the surface area is much greater, and these bubbles go up this cylinder very, very slowly. So they collect much more metal. And it's actually increasing recoveries by 5 to 10% by switching from the old system to the new system. And this is what we're doing at 4 of our mines in 2018. Another interesting technology, and I only got 2 minutes left here, is cylindrical mills. Now, if you look at these ball mills, this technology has been around for over 100 years. We spend as a business $4 million on metal balls each year. We also spend $4 million a year on energy to turn these ball mills around. We've got 19 of these ball mills in our company throughout our 6 operations. Over the next 2 years, we're going to be replacing them with this other technology. I'm not going to get too detailed into it because I've only got a minute left. But again, switching over to this technology, we could also increase recovery substantially because all the mineral is grinded to exactly the same size. In the old technology, you get some rocks coming out that's not grinded properly, and of course your recoveries are impacted. So another exciting technology that we're employing. Purest silver company in the world. 70% of our revenue is from silver, as I talked about, which is increasing next year. I'm a big believer of ratios. Every time we get up to the 80 range, we see a collapse. I think we're going to go into another 5-year or possibly longer cycle of silver outperforming gold. So I think it's a good time for people to be looking at the silver sector. Our stock is like gold on steroids. If you're on the right side of that, you can obviously do quite well. And some future catalysts, which welcome to come to our booth and grab one of these presentations, and thanks for your time.